Hello and welcome to the show. So let's start with some information. This is not financial advice. I am not a financial advisor. This information is intended for entertainment and educational purposes only. So this is a slide presentation about Camber Energy, and full disclosure, I happen to own some Camber stock. And as we can see, Camber, I'm calling it Camber Viking because it's really the combination of the two companies, really. So, how did I discover this stock? I saw it on I first saw and heard about it from a Rollerpigeon video. I strongly recommend that you check out this video. It's a CEI Camber Energy company profile. Here's the video. I'll have a link in the description below. So I checked out the stock price. First thing to note, it's been headed downwards. But if we look at the chart, this is a log scale, which means the high where it started from was around $120 million. That's insane. And it got down to $1.30. That's even more insane. That's truly insane. So that led me to question reality and what's going on. So I took a double take and came to the conclusion that this can only happen because of reverse splits, followed by continually falling prices. Right. So this is the logical explanation of what happened. The stock price never actually hit $120 million, or it was never sold for $120 million. But when you factor in reverse splits and falling prices, that's where the stock price eventually wound up at. So this is naturally a big, massive warning flag and a big stay away sign. You know, the stock headed downward, and it's lost a lot of value along the way. So long story short, the only way this can happen is that management has to be either corrupt or incompetent, or both. In this case, it's likely that it was both. Okay. So last year, for instance, Camber reported $397,000 in revenue. So clearly the company was circling the bankruptcy drain. It had to do something. And this is a story of what happens. So if we look at Camber actually owns 73% of Viking stock. And Viking has no problems with corrupt or incompetent management. Viking actually has pretty good management. Their CEO of Viking decided to become CEO of Camber. His name is James Doris. And the story of Viking is Viking wants to get listed onto a major exchange, which Camber is, and they were having issues with getting delisted from that exchange due to the massive drop in price and some reporting problems. So James Doris's plan was to clean up Camber Energy, and make it a viable concern again. And it was proceeding pretty well. So if we look at what he's done so far with Viking, they recently closed a deal with ESG for clean energy. They acquired a 100% exclusive Canadian use carbon capture and clean energy system license, so they can do a particular type of carbon capture and clean energy in Canada, and that's a pretty interesting license what they've got. I won't go into it in detail, but it's really fascinating. It's pretty good. So anyway, Viking also owns a 60.5% stake in Simpson Maxwell. Simpson Maxwell makes what they call power solutions. They're basically industrial generators, and they produce power in the range of hundreds of kilowatts, tens of kilowatts, thousands, that kind of thing. So it's they produce electricity where the grid won't go. Okay. Viking also owns a bunch of oil properties and oil and gas properties in Texas, Louisiana, and Kansas, looks like. The sub-companies' names are Petrodome, Midcon, both drilling and petroleum. And very recently, they picked up this renewable diesel plant. I'm putting some question marks on there because I don't know anything about. It's from New Rise Renewables. I think it's biodiesel. I won't go into it in detail. I'll probably do another video on that. But it looks promising. So let's see what happened in recent price history as a result of all these things that James Doris has been doing. So if we look at the price, We see that it started heading up when James Doris started taking over the company and cleaning up Camber. Right? He proposed a merger between Viking and Camber. Stock price started going up, right? It started increasing dramatically, hitting almost $5 a share, I believe, just under. Then we saw a short report being issued by a company called Carousdale Capital. So they disclosed that they initiated a short position first, and then they published a short report, and they described why they're shorting, and the price of Camber basically plummeted down to 88 cents. That's an over 80% drop. So they complain about management corruption in their short report. They basically state that the ESG license is worthless. Carbon capture is a scam market. That's what they say. And they indicate that, hey, this company is circling the financial drain. They're going to be delisted soon, right? So they need to clear up some 10K filings by November 19th, and they probably wouldn't be able to do that. That's in the Carousdale Capital report. So this looks very close to something that is called a short and distort mechanism. Looks to be a classic example. Basically, what happens is that you short a stock and then you start spreading bad rumors about it. And it sounds very similar to a short and distort, if not classic textbook-like, right? So if we look at it, let's look at the first problem. Let's look at the first thing that they state. The management was corrupt. Yeah, the old management was corrupt and incompetent, but that's not really the case right now. We have new management under James Doris. He's taken over and he's changed stuff. So that's really a mischaracterization. That doesn't apply anymore, I believe. If we look at the recent price history and we see what has been happening, we see that we're nearing the November 19th deadline for the SEC filing, and so that's a potential possible upside catalyst, right? That might increase the price of the stock dramatically. And sure enough, we did see the price of the stock increase dramatically, but not on November 19th. This was a little bit earlier, and the question is, why did this happen? Why, did someone know something, or someone buying up stock? Well, it turns out that ESG released their own report, and their report is on the Carousdale Capital report. And they basically debunk the Carousdale Capital report, right? Because it disparages their technology and their company, right? They suggest that ESG is not a viable firm, and so in this report they talk about ESG, the company, the Scuderi Group, but they talk about the history and the carbon capture market. They go over an allegation. There was some issues that ESG had with the SEC like 10 years ago. And they go over those allegations in details with links in detail, right? But this was something that happened 10 years ago and is no longer relevant right now. They talk about the technology of carbon capture. And they clearly show that Carousdale Capital has no idea what they're talking about in terms of what carbon capture is, how it works. They have no technical competence whatsoever. And they're either misrepresenting and or just clueless. So it's one or the other. It's probably both. They don't know what they're talking about, so they're trashing it, right? Not only that, they cite an example about carbon capture and CO2 in the cannabis market and saying how it's totally... So the Carousdale Capital report talks about carbon capture in the cannabis markets and CO2 in the cannabis markets, and they were totally wrong in everything that they stated about that market and how carbon works in that market. And this particular report goes over that in detail. I suggest you read it. It's really fascinating. They also show that Carousdale Capital has no knowledge of how carbon markets work in general in Canada and what the tax implications of CO2 emissions are in Canada. Whether or not you believe that CO2 emissions are a pollutant or that they will damage the environment, doesn't really matter. There is a market in Canada, and there are tax implications of that market, right? And so they discuss the value of the ESG clean energy solution and the value of that license. Furthermore, ESG stated that they're actually going to be paid partially in Viking stock. So they believe in the value of their technology, and that they believe that Viking will be successful in the use of their technology, right? So, why be paid in stock if if the technology is useless? I mean, come on, give me a break. Anyway, this led the Twitterverse to talk about it, and we see that this particular tweet came out, which I think is sums up the situation really well. It's from Try Me Events, I guess. Said what Cokedale wasn't counting on is just poking one tiger, but many. I think Cokedale is a disparaging term for Kerrisdale Capital. Anyway, they said, with all the partnerships that Camber has, there's no way, as CEO, I wouldn't be on a conference call with every single partner strategizing on a rebuttal. It's retail's time to teach them a lesson. I suspect he's talking about the CEO of Try Me Events. But anyway, there was a rebuttal, and it's pretty good. So basically, what we're seeing is that the ESG license having no value and that carbon capture is a scam market, that was debunked by the ESG report itself. You can check it out. So that leaves the last real major thesis that they're talking about, which is that the company will be delisted from the stock exchange unless they file a 10K correction by November 19th. And as you know, it is now November 22. So what happened? Well, I wouldn't be making this video unless James Doris already filed. So he filed on November 19th at 8:59 p.m. Eastern Standard Time. He filed late, but, he submitted it late, and it will take place on the 22nd, so it's fine. Anyway, so what happens as a result? So the last item on their list has been basically taken care of, right? So what does that really mean? If we look at their stock as a result from the 15th to now, basically, when I'm making this video, we see that the ESG response to the Kerrisdale Capital short report resulted in a nice increase in the stock price, going up to above 140, headed towards 150, and in fact hit about 150 as a result. The following day, the price plummeted, fell like a brick because of a short attack. And that short attack was greater than 10%, so it resulted in Camber being on the short sale restriction list for the next day. And the price didn't go anywhere on the short sale restriction list because that was the 19th, and everyone was basically waiting for that report to come out. Everyone's waiting for the filing of the 10K filing with the SEC. Once that happened, then a lot of people were predicting that the stock was going to go bonkers, right? Going to go hit the roof. Well, it turned out that an 8K was submitted to the SEC just after the closed, or around the closed, and that caused the stock price to go up dramatically, 40%. So, and it kept going in the after hours, went up above $1.50. And later on, we found out late at night that the 10K was submitted. And the following day, we saw the result of that, right? The stock price opened up higher, and then it opened up around, $1.30 or something like that, and went as high as $1.50, and it's been trading in that area, $1.40 to $1.50 or so. There's been an increase in stock price to above $1.50 in after hours trading. And I suspect that's because there's been further disclosure that the SEC said, hey, you can take until December 7th, mid-December, and if you need an extension, you can even take until, You can even take until March or so. I think it's March or May, I forget. So they have a lot of time to file, to fix all their filings that need to be done. So, as a result, we see the stock price has been increased dramatically. Here's a tweet that came out from Camber Energy. It's a result of a quick CEO update took place on Vimeo. And let's just see what that says.
Happy Sunday, whether you're spending time with family, observing your faith, or watching football, or all the above. Hope you have a great day on the subject of football. Go Cowboys. I thought it'd be helpful going into the week to provide a brief update on certain matters, starting, of course, with the status of the filings at Camber Energy, CEI. We filed after hours on Friday the amended and restated 10K for the year ending March 31, 2020, which involved a full audit of 2018, 2019, and the first quarter of 2020. So it took the new auditor a significant amount of time to get up to speed, to get access to all the historical information, and complete its review. But that got done and was filed on Friday. It'll show up the pre-market tomorrow. And again, that doesn't represent the financial position of the company today, but it was an important restatement and served as a catalyst for completing all the remaining items. And well, two things. One, I have to say the level of service from the existing auditor, who was Viking's, has been Viking's auditor for a few years. The level of service is far superior than that of the previous auditor. No comparison. So, secondly, the remaining filings are all pretty much draft form, ready to go. The auditor just has to finish its review on a few things to button it up, and then we'll get those filed. And in an effort to be proactive and transparent, we communicated with the New York Stock Exchange and the lender, and both were extremely accommodating. The team at the New York Stock Exchange is absolutely fantastic, and we asked for a few extra days, and they gave us more time than we requested, and as did the lender. So it's all good there. It's not going to affect the company's status with the exchange, and we're working around the clock to get the remainder of the items filed. Again, everything's in draft form, ready to go. Just have to finish the review process. In the meantime, we're not stopping with the growth initiatives. As you might have observed from some of the recent filings, at the Viking level, we really strengthened the balance sheet in October by selling some oil and gas divisions that were subject to high interest loans and hedge arrangements. So that was helpful to put us in a great position going into the new year. And then on Friday, we filed an 8K at Viking with respect to the company's proposed purchase of a renewable diesel facility in Reno, Nevada. You have to read the 8K for specifics, so everything I say is subject to that 8K. But if it closes and it's conditional on a number of things, that would be a transformative acquisition for the entire organization. So a lot of work to do on that. And then also quick update on our relationship with ESG Clean Energy. Last week, you might remember that Viking acquired an intellectual property license with ESG in August, and there was an upfront royalty payment due, and we paid some of that in cash in August of this past year, and other payments were due in January 22 and April 2022. And ESG, pursuant to the terms of the agreement, has elected to take the majority of the balance in stock of Viking, which is great for Viking because it lowers the cash obligation, but also more importantly, demonstrates the strength of the relationship between the two entities. So we're very pleased with that outcome, and lots of opportunities here. So again, working diligently, we get all the filings up to date, and we know what we're doing. Viking, as you know, listed on the OTCQB. We're current with our filings. This is where all the activity, all the assets are. Here, it's just cleaning up the legacy items, and specifically the historical characterization in the financial statements of the sale of Camber's Series C preferred stock. So those preferred stock entered into Camber's capitalization in 2016, 2017, and the management team at the time and the auditor at the time characterized it one way, and quite frankly, it was just wrong. So we're cleaning it up. And so the financial statement here will show up tomorrow. Again, it's historical, but it was the catalyst to get everything else done. And we're confident we're going to get that done in the next few days, and we'll provide updates accordingly. Thanks very much. Enjoy the rest of your weekend. We'll talk later next week.
So that was the update from James Doris. He provides a lot of these video updates, and they're quite insightful. They let you know what's going on. It's very transparent. I don't know. I just feel as though he is doing a good job, and that the job is not an impossible task. He seems up to the task, and he seems to be doing well at it. So the plan for Camber is, I believe, to follow the 10K and pave the way for the merger between the two companies. They announced they previously announced a merger that they plan to do. There are rumors that they will be announcing a merger, And if they do, that will require a shareholder vote, I believe. And the plan is, I think, to get the shareholder vote done. And assuming everyone agrees to the merger, do the merger. And that will result in a new company with a new CUSIP, right? And that can be traded on a major exchange, and that will solve both companies' problems. So this means that the old Viking and Camber shares will probably be retired, and new shares will be issued at that point. At least I think that's what. So this is my impression of what's really going to go forward, right? So, so the first three steps could result in the stock price going higher. The fourth step could result in a gamma or a short squeeze. I don't know, but it could potentially go up significantly higher at step 4, right? So this was another tweet that came out. I think this is instructive because it basically says what's in the pipeline and what are the what are the possibilities for Camber/Viking. So it talks about the various things that are in the works. We've got the 10K by the end of the week. This was an older tweet, but the 10K has been taken care of, I believe, and the filings for the subsequent filings will be taken care of quite soon. There's a merger that's in the works, which I just described. But not only that, if we look at it, oil is at an all-time high, and price of oil, I believe, was being touted that it might hit $120 next year by Bank of America. So also, the president recently got the infrastructure bill passed, and so that means funding for clean energy and carbon capture could be in the works. One thing I did not mention is that they even talked about doing crypto mining on these various oil platforms, and that could be another source of revenue. That could be a large source of revenue potentially. And the response to the short report that took place by ESG and resulted in an increase in the stock price. This particular tweet thinks that the price could go above $3, but it's possible that it could do much more than that, right? I think $3 is probably a low-end estimate and a low-end near-term estimate. How's that? So I mean, my take on it is it was almost at $5 a share before the short report. Once the short report has been thoroughly debunked, and it's been mostly debunked right now, I think, it could easily get back there, right? So could it get back there before, to the same price it was before the short report was debunked? The other thing is, what happens if and when James Doris cleans up, Camber? Where could the price go at that point, If oil gets to $120 a barrel in 2022, as per the Bank of America report, what could happen then? Finally, we got the whole clean energy and carbon capture markets. The infrastructure bill could be funding a lot of clean energy stuff, and they could see a lot of money coming their way in the form of government grants. You never know. So this is why I think that there's a lot of positives for the entire issue between Camber. I think it's got more on the positive side than on the downside, right? So at least that's my current thinking. Anyway, so here's some info about Camber. They here's the official sources that I've been using to make up this presentation. There's a CEO blog. Camber has a Twitter page. James Doris has a Twitter page as well. Viking Energy is also on Twitter. As you can see, there's a lot of Twitter here. And finally, there's a Reddit group with 9,300 members and growing. So a lot of resources there. So a lot of people know about the stock, and I think the question comes up. Do you think it could head higher? I don't know. I mean, I certainly placed a bet on it because I own some shares on there. And with that, I'd just like to close by letting you know that I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. And that's basically just telling you my opinions and thoughts and what I was doing. Okay? That's it. Goodbye.